we're invested across the whole economy. So whether that's in agriculture, whether that's in energy, whether that is in retail, whether that's in the automotive sector, all of these sectors will not escape climate. So we really have to be thinking about climate risks and opportunities as investors. I'd start off by saying that while there is some very good leadership happening in the investment community, it's by a small number of actors. And there is a very long tail of investors who are not acting on climate at all and not really considering it within their portfolios. And I think that's a great concern for all of the people that the investment community manages money on behalf of, the risk that they're exposing their beneficiaries to. So I just wanted to start it by, I think most people in the room know who the PRI is, but for those that don't, the PRI was established in 2006. It was established out of the United Nations really to bring the sustainability discussion to capital markets. So we currently have 2,500 signatories across the world, and they represent nearly 90 trillion in assets under management, US dollars. And we have the 6 principles that Malcolm spoke about, which is all about incorporating ESG factors into your investment process. Here in across Africa, we have around 90 signatories. In South Africa, around 70, including some of the largest pension funds in South Africa. We're a fast-growing organisation, so as we were talking about 2,500 signatories, that we've seen steady growth over the beginning years of the PRI, but over the last couple of years we've had really strong growth. That growth is really just reflected in the fact that more and more investors around the world are starting to understand that they really do need to be considering ESG factors, and I think climate has been one of those catalysing issues as well that investors understand they need to do more about. So I just wanted to talk briefly about some of the work that we're doing, but one of the reasons again that I think that investors really need to be paying more attention to climate is if we look at last year's or this year's World Economic Forum Global Risks Report. What we see is that what the World Economic Forum says is the biggest risks that are facing us in the world are all really around ESG factors, and most of them are around climate risks. So extreme weather, natural disasters, and a failure to adapt and mitigate climate change. 10 years ago, completely different story for what the World Economic Forum was talking about. Then it was really what was the fallout from the global financial crisis and how did the world adapt. Was also about chronic disease, was in the time when there was SARS, etc., that was around the world. Very different risks, and again that's why I think we've seen a growth in people thinking about ESG factors over the last 10 years. So in the last session we spoke a little bit about the IPCC report. From the PRI's perspective, our focus is on the 1.5 degrees. How do we keep warming to 1.5 degrees? But this requires that there needs to be a 45% reduction in emissions by 2030, but it also means that we need to see renewable energy supply our energy, 70 to 80% of it. That is a huge major shift in economies around the world about how we get our energy. And this is something again that investors are exposed to. We're invested in the energy sector. How do we make sure that we're not affecting our investments, that we're not left with stranded assets, that we're not left with investments that can never be pulled out of the ground? But equally, how do we make sure we take advantage of opportunities? This is about risk, but it's also about opportunities. How do we make sure that we invest in the solutions for the future? That we make money out of the fact that we can be investing in renewable energy, new technologies, the technologies that are going to power the world in the future.
Sorry, just on that 45% decrease, what is the trend at the moment? Are we still increasing, or have we turned a tipping point and we are starting to decrease?
We are starting to decrease, but not anywhere near that we should be at all. But we're decreasing in some uses of some fossil fuels in some countries. Yes. Yeah.
I'm sorry, I'm not sure that's great.
I'm just going to answer the whole question.
Yeah,
We can have
okay.
the debate later.
Yeah. Yeah. Okay, so one of the pieces of work that we put out for our signatories in September last year was a piece of work that's called the Inevitable Policy Response. So we believe that investors aren't acting, the world isn't acting in the way that it should be, and we're not going to limit warming to 1.5 degrees at the rate that we're heading at the moment. In the last presentation, we saw that there's going to be a global stocktake in 2023. So we need to see where the world's up to. Countries around the world are also going to have to put in their next commitments to the Paris Agreement. So this is all happening, between sort of now and 2025. So we strongly believe that at this time it'll become even more evident than it is today that we're not going to be able to keep the temperature increases there. And that this will mean that governments around the world are going to have to take stronger policy actions. That those stronger policy actions will impact financial markets and that they will have a significant impact on returns. And our message to investors through the work that we're doing is to say if we don't act now and we don't do more now with urgency, we are going to pay the price later. We believe that this could be, depending on how this all plays out, this could be on the scale of the global financial crisis of 10 years ago. At that time, developed countries alone lost $5 trillion from our investments. Is that what we want to see happen again? And as Malcolm was saying, are we just going to sleepwalk into another global financial crisis? Or are we going to take action? And I think one of the important things is that unlike the global financial crisis, we're not going to be able to say as an investment community that we didn't know, we couldn't see it coming, and we didn't have time to act. We've been hearing about climate change, as you could see from all of the reports that were put up in the last presentation, for decades and decades and decades. We've been talking about a climate emergency, climate change for some time. We're now talking about a climate emergency, yet there's still investors who aren't acting. One of the things, of course, that investors need is information that is in a financial form. So it's all very well in some ways to talk about climate risk, but how do we get information in a financial form that we can use? So one of the things that the PRI has been championing very much is the Task Force on Climate-Related Financial Disclosures. Our chair sits on the task force. Our staff have fed heavily into its development. So the task force is really about getting that information that we need. It's set out along governance, strategy, risk management, metrics and targets. Investors are starting to use this framework, and they're starting also to make sure that they're asking the companies that they're invested in to report along the TCFD. For the PRI, everyone who was a signatory to the PRI and every investor has to report on an annual basis about their activities, their responsible investment activities. 2 years ago, we added the framework from the Task Force on Climate-Related Disclosures to our reporting framework, so that investors could start using this framework and getting used to how it operates. We were really pleased that when we did it the first year in 2018, we did it on a voluntary basis. So nobody had to spend any time doing it. You weren't being scored on it, anything. You weren't being assessed, any of those things. But still, just under 500 of our signatories used the framework. We've just finished our latest reporting, about 600 have used the framework. But from next year, the reporting, around these two first areas, governance and strategy, will become mandatory. So all of our signatories are going to have to become familiar with this framework, and they are going to have to report. It doesn't mean that we want to replace mainstream TCFD reporting. We think this should be complementary, and this should be how you start to learn about the TCFD indicators.
Not everybody will be familiar with TCFD. Why don't you just maybe explain a little bit about TCFD?
So TCFD was something that really came out of the fact that Mark Carney had made a number of speeches, who's the Governor of the Bank of England, about the fact that there's a whole lot of financial risk from climate, but that we needed to get better data and better information within the market for the market to be able to move. And he established then with others the Task Force on Climate-Related Financial Disclosures, which has been established by the investment and corporate community for the investment and corporate community. Really looking at, well, how do we get that? How do we translate climate information into data that we can use as investors? And it is growing in importance around the world. I was in Japan just earlier this year at some G20 meetings. There is a big consortium of Japanese investors and companies, 170 of them, who have committed to using the framework. Prime Minister Abe in Japan has committed to hold in October the first ever global TCFD summit. There's more and more countries around the world who are starting to tell investors and corporates that they need to use the framework and encourage them to do so. And I would encourage you all to look at it as a way of thinking about the risk that you have in the companies. So how are you making sure that you're getting good financial information from the companies you're invested in? The TCFD will give you a way of getting good information that you can compare across organisations. The other piece of the work that we're doing is really focusing on engagements with the companies that we're invested in, because let's face it, that's where investors have leverage. So one of the biggest engagements that we're involved in is called Climate Action 100+. So it's an engagement, it's a 5-year engagement. It's focused on the largest 100 emitting companies in the world. It has now 322 investors across the world, and they represent 32 trillion in assets under management. This is a difficult group to ignore. We have 3 asks. So the first thing is wanting to understand the governance of the company. So at these large emitting companies, what is the board thinking about? What's its strategy? What conversations are you having? Do you have the right people employed? Do you have the right skills on the board? Are you having these conversations about the transition to a low carbon economy at all? Then we're asking companies to set an emissions reduction target that it's in line with the Paris Agreement. And it needs to be something that's published and measurable, that we can see that those reductions are happening. And then the other is to get companies to report in line with the TCFD. This is the biggest ever investor to corporate engagement that's ever happened on any issue at any time in the history of the world. And it's starting to have some good impacts. We've had very large corporations like BP and Shell who have committed to emissions reductions targets. They've also aligned their CEO compensation with these reductions, with ESG factors. So compensation is at risk, and we know that that's a driver. We've seen corporations like Glencore who have said we won't expand any more of our coal. Now, that may not be as far as we would like things to go, but we also understand that this is a transition and that these things can take time, and we have to get started, and then we want to see things ratchet up over time.
How many South African companies?
Yeah. There's 2 South African companies that are on the list. It's Sasol and Eskom. One of the things, though, is that there is not one South African investor in the 322 organisations who are taking part in this engagement. Yes.
Just to clarify, Old Mutual was a signatory.
Yes.
As a consequence of our relisting, we are going through the process of relooking at that, and we are engaged.
Good. And I hope you will rejoin. But as it currently stands, we don't have anyone.
Also, I think Anglo's a bulletin in that group as well, if I'm not mistaken. So just because we see them as South African companies.
Okay, well, from the technical point of view, there's those two companies. And one of the reasons why it's really important to have local engagement is we've done a lot of academic research on what makes engagement with companies successful, what makes it work. And one of the ingredients is that you have local investors who actually understand the market, who are in the local market. It's good to have global investors behind you to show that this is something the world is involved in, but it is a key ingredient to having local investors. So one of my aims by the end of this week, I've been talking about this everywhere, is to have a local investor. I'm not allowed to go back to London without one.
There are a few in the room, yeah, just twist the arm.
Yeah. And I would say, for those of you that are interested, one of the reasons that collaborative engagements are really successful and important, there's a secretariat behind this, so it's not like there aren't staff who are working on this. There's also a whole lot of other investors who are sharing information and knowledge. So you're not on your own, and you're not having to do all of the work on your own either. The other thing that we're doing a lot of work on is the issue of the just transition. So we spend a lot of time in the investment community talking about stranded assets. But stranded assets are not just physical assets. Stranded assets are also people, and they're also communities. And we should not lose sight of that, because we are not going to be able to meet the climate challenge if we make the workers of the world the people who are the losers in the climate discussion. We can't have areas of workers who are communities and workers who are just decimated and left on their own. We've seen this happen in the UK. I live in the UK. We've seen this happen in the Thatcher years when, you know, we're closing all the coal mines. Some of those areas are still decimated today. There's still really low unemployment. There's intergenerational problems that have been caused from these issues. So we have to have, as part of our conversation as investors, not just about the physical assets, we have to have, as part of these conversations, about, okay, if you're winding down your coal and you're winding up your investments in renewables, what's happening, company A, B, C, D, about the workforce? What are the plans? How are you retraining? What is the reinvestment that can be made? That we are here to work with you about those issues, that we will sit down with companies, with governments, to think about other plans that can be made for those sectors. Now, in not every sector, just because there's a coal mine, can you replace it with, you know, renewable energy? The sun might not shine in that area, and the wind might not be blowing in that area. But there may be other investments. There may be other things that we can do. So before we had COP in Poland, which is a large coal mining country, we got a whole lot of investors. There's about 130 odd of them now who represent 6 trillion. We will continue to grow this, who have committed to bringing in a just transition into their work, and we're doing some more work and some more guidance for investors on this issue. It was something that we worked with some academics on, London School of Economics and Harvard Kennedy School, but we also worked with the International Trade Union Congress on this issue as well. And we involved a number of unions and a number of pension funds that cover the fossil fuel sector in putting the work together. In terms of the PRI, I think as well, these are all difficult issues, I understand, for trustees to think about. So we've got a lot of practical guidance. We've got a strategy for asset owners on how do you think about this and craft your investment strategy. We've got how do you have conversations with your investment managers. A lot of, obviously, pension funds outsource their investments to managers. So, you know, having that conversation with managers, understanding about what they're doing around these issues is really important. So there's an abundance of guidance on our website of all the different things that you need to know, that I would encourage you to use. We've also just done some new research and put out some work on investment consultants. They obviously have an important role in this market and many other markets. I'm not saying this is true in this market, but in some markets, particularly in the United States, investment consultants often are a barrier to getting taking responsible investment forward. So what are the questions that you need to ask as pension funds when you're going out to get a new investment consultant or talk to them, is what all of this guidance is around, that we'd encourage you to use as well. When your investment consultants are getting managers for you, are you thinking about all of these issues, and people who have got the skills to think about this big transition from a high carbon to a low carbon economy? We've also got a responsible investment review tool that's available for trustee boards. This is free. So this is basically an online survey that you can do as a trustee board, trying to make sure and understand how you all feel about responsible investment and what you're doing, and are you all on the same page? And then you can basically, we can facilitate, or you can facilitate for yourself, a discussion from there. So lots of things for you to be able to get started if you're not already. And I would say, from what I know from around the world, that there would be a number of organisations in this room, because there are in other parts of the world, who really aren't having a detailed discussion about the transition from a high carbon to a low carbon economy. And this is one way of getting started with that. And we also have some online training for trustees as well, but I don't want to do a sales pitch. I'm really here to have a sales pitch about investors need to do more on climate, and that there are lots of resources out there for investors.
Yeah, thank you very much.